Hello everyone, this is Terry with Futures.io, and as always, I would like to thank you for joining us today. Now, it is my pleasure to welcome back Scott Hodson for today's webinar on Bitcoin and cryptocurrency trading strategies. If you have a question, please feel free to type into the questions box throughout the event, and we will try to answer it at the end. If you're watching us on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to the channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I will hand it over to Scott. And you should get the pop-up to share your screen.
All right. Everybody hear me okay?
Yep. Looks good and sounds good.
All right. Thanks, Terry. All right, welcome. Thanks for coming, guys and gals. My name is Scott Hodson, and I'm a trader. Anyway, talk about me in a minute. But I'm glad you guys are here today, and I'm glad to be with you. Thanks for sharing your time with me. I'm just going to quickly go over some of my experiences trading cryptocurrencies, and hopefully that'll benefit you and your forays into this area as well. Okay, so just disclaimer, obviously trading involves risk, and trading cryptocurrencies is probably the riskiest asset class you can actually trade today. And the information you get today or tonight is for educational and entertainment purposes only. You know, when people ask me for my opinion, I always say I give it to them, but with a disclaimer that it's for entertainment purposes only. Because my opinion is just that opinion. So, but anyway, nobody's promoting or recommending that you invest in any particular financial instruments here. And you're also responsible for your own financial decisions. If you're not sure about how to make these decisions, I recommend you find a professional advisor if you need help making investment decisions. Okay, with that in mind, I just want to give you just a little bit quick history of me. This is me and my family up here. My wife, I have triplets, these 3 kids. They're awesome. These 3 kids here on the bottom right. And that's one of my 3 dogs, Leo, on the top right there. And on the bottom left, you see my daughter kneeling on the ground in a volleyball game. All my kids are fairly tall, play volleyball and basketball. That keeps me busy. So I grew up in Silicon Valley, and my dad was an electrical engineer for Unisys and some other companies. Was a member of the Homebrew Computer Club, if you know what that is. If you don't, you can Google it. And I was always surrounded with computers. My first computer we ever had was an IMSI 8080, which was a kit computer my dad put together. And then this thing on the right was called a micro video computer. It was about the same time as a TRS-80, but I didn't have a TRS-80. But it had games, and I would play the games. But then I got bored of the games, and the games are $50, which for a 10-year-old in the 80s, that was a lot of money. So I found a book on basic programming and read it and learned how to program and started making my own video games. And this, growing up in Silicon Valley, there's computer science classes for 7th graders. And one of the first things I remember is this thing called the Robot War. And you would program a robot, and then other people's robots would go, you would fight other people's robots in the class in this battlefield here. And I took first place, and then the teacher even ran it against his 2 sons who were computer science students at San Jose State University, and I beat all their robots. So at that point, I kind of thought, hey, I'm kind of good at this. Maybe I can make use out of this thing that I enjoy. I have a degree in computer science from Brigham Young University, and then a master's degree also in information and computer science from University of California in Irvine. In the 90s, my first job out of college was I developed software for a company for portfolio management and content management systems on Wall Street. And eventually we took an office. This was based out of Irvine. And then I moved to New York for a couple of years, worked on Wall Street, and we had an office on 55 Broad Street, which is the old Drexel Burnham building. It was converted into like an internet high-tech facility. A little bit later, the .com boom came, and I was doing internet. I was the only one at the company that knew stuff about the internet, and I learned from at graduate school. And then I left that company to join Appear.com. I worked at Buy.com. And you guys remember the sock puppet? Maybe you don't. And then during that time, when I was in grad school and about to go to buy.com, I met a friend, had lunch with a friend, and he said, "Hey, I made $50,000 trading options." I'm like, "Well, what's options?" And so I got really interested in options, and I started trading Apple options and did really well, really easily. Made money. Then I lost. Of course, my luck ran out, and I lost money. Then I realized I got to learn something about options, so I took some courses, primarily from the Optionetics guys. And then I started a meetup group. It's called the Orange County Traders Association in 2009, and I've been hosting that for a while. Anyway, the long story short, the financial crisis hit, and I blew up one account, shorting the FAZ and the FAS options with unlimited risk. About that time, I said, "Man, there's got to be an easy way to do this." And someone told me about NinjaTrader, and because I do a lot of development in C#, and then I found Big Mike, and this is a screenshot of his old blog before the forums were started. And then I started writing automated systems for myself. So that's kind of where I'm at today. And that's me. Quick background. So why are you here today? You want to know about cryptocurrency and strategies. And I have to disclaimer a little bit. This is based on a talk I gave in January, and I've updated it. But in January, December was the big hoopla, the big rise. And we all got really greedy, right? We saw all these Bitcoin going up to 19,000. For example, we saw Bitcoin at 19,000. We heard about these things, other things called like Ripple going up, thousands of percent. And for a lot of people, it was probably just, greed, the wanting to get involved. One of the things I found interesting is not just, greed, but these are big moves. And trading in the stock market all year with very low volatility, I was doing okay, but it was just kind of a grind in my trading, and I was doing, pretty well actually, but I wanted to find something that had volatility, that moved a lot. And when I saw these instruments, I started getting involved more intently last summer, around August and July. I'd heard of Bitcoin obviously way before, even when it first came out. I remember a TED Talk and some guy was explaining what it was, and I followed it for a while. And the whole mystery of who is Satoshi, I thought was kind of fishy. The conspiracy theorist in me thought, oh, there's probably some government currency or some government plan that got out of a lab that shouldn't have, and maybe it's the NSA is Satoshi, or I don't know. And then the whole Mt. Gox explosion happened. I said, oh, I'm out. I don't want to touch these things. These are ridiculous. And so I kind of lost focus or lost interest after Mt. Gox in Bitcoin and other things. But then later last year, I just heard more and more people getting involved, and I started looking at some charts, and there were some exchanges. And anyway, so that's kind of the history of me and cryptocurrency. So let's just define really quick, what is a cryptocurrency? So it's a store of value in some ways. What is a currency? Yes, a currency, one, is a store of value, and it has value. Well, what people say, what is the value of it? Well, it has value because people say it does. We're willing to exchange it for a certain amount of money, and so that market determines the value. Whether you agree on it or not, it has value. It's also a medium of exchange. A lot of us aren't buying our groceries with Bitcoin. Probably none of us are. But that's what a currency is, and this could become someday. A lot of people are working on that. Now, we've seen digital or electronic currencies before. I remember in the internet days, we had flues, and then was it Whoopi Goldberg was the spokesperson for this flues currency. Beans, and DigiCash were other ones. M-Pesa is an interesting one, actually. I think it's in Africa, or Africa mostly, but in Africa, your cell phone minutes are very valuable and expensive, and so people will use their cell phone minutes to buy commodities and groceries and things like that. And that system and that currency, I don't want to call it a currency, but it's called M-Pesa. You can look it up, but it's a pretty interesting way to do commerce with minutes, cell phone minutes. And that's actually in effect today. And what makes it a cryptocurrency? Well, it's crypto because cryptography is used, and I'm not going to get into all the technical details, but it's a big part of it. Okay, the strengths of cryptocurrencies, most of you probably already know this, but really quick: anonymity, which is a good thing and a bad thing. We'll get into that. It's a decentralized financial system, so we don't have one issuer of a currency. It's distributed and decentralized. No one person controls it. In the case of Bitcoin and some other currencies, if you guys can hear me okay. Okay. In the case of Bitcoin and others, we have finite supply, meaning there's only so many coins that will ever exist. And so it's even more stringent than being on the gold standard. At least on the gold standard, you could go out and keep looking for more gold. But, and people are mining Bitcoin still, trying to find more not find, but reach the 21 millionth Bitcoin in their mining. So what that means is that, central banks and governments can't just create infinite supply of currency like we have the fiat currencies. And Bitcoin came about around 2009 in some ways a response to QE and the response of central banks printing money and to help recover from the global financial crisis. And there are a lot of people about that. All right, so it's fraud. When I say fraud friendly, because of the anonymity, you can blackmail people. I actually have received a blackmail letter saying if you don't send me $8,500 in Bitcoin to this address, I will embarrass you and tell people what you've been doing, even though I haven't really been doing anything wrong, and he or she is not actually been tracking me. It's a form letter I've seen. A lot of other people on the internet have received similar form letters. But yeah, it's a great way to blackmail people and commit fraud. And it's not issued by any government, so we're not bound to any government control, which is kind of its weaknesses. There's a lack of regulation. If you make a mistake and transfer cryptocurrency to the wrong address, there's no way to claw back or undo. There's no undo. We're also, some of the most powerful people on the internet are very well invested and empowered by the current system as we have it. And so they're going to fight tooth and nail to keep things the way they are, and they are doing that. We've heard much about security and different exchanges or huge wallets being hacked and coin being stolen. It's not really that user friendly. Credit card is very easy, cash is very easy to use. Trying to use a wallet and transferring funds is more difficult to do and can take a while depending on the response of all the miners and how much fees you're willing to pay to have your transactions validated. And it's very volatile and risky. If you're getting paid in Bitcoin, you got paid twice as much as you did in December as you do now, just because it was worth a lot more then and it's gone up and down a lot. So those are some of the weaknesses. So there's a lot of exchanges where you can exchange or trade Bitcoin and other cryptocurrencies. These are some of the more popular ones. There's a lot of them. I'm not going to list all of them, but the main ones I use today are Coinbase. So what I use Coinbase for is just basically to deposit US dollars and to buy Bitcoin or buy Ethereum or Litecoin or Bitcoin Cash, whatever coins they have. Usually it's just Bitcoin. And then what I can do, I use Binance because at Binance they have a lot of the other coins, the altcoins as we call them. So I can transfer Bitcoin from Coinbase or GDAX to Binance. And most of my crypto trading, my goal is not so much to make a lot of dollars, is to increase my Bitcoin balance. So my goal is to trade use in a way that would just increase the amount of Bitcoin my account's worth. Ideally, then moving it back to dollars, but only when I need it, or if I need to withdraw for some reason, maybe an emergency, or it's like I kind of see it as a Bitcoin savings account, because long term, I'm a long-term bull in Bitcoin, And if there's some other coin that comes up that takes its dominance, then I'll maybe transfer over to that. But for now, I'm acquiring Bitcoin. There's a lot of pressure to implement know your customer and anti-money laundering procedures that we have with regular currencies, and these assets are considered property, not currencies. So if you buy and sell it, you owe taxes on the gain, just like any other piece of property. I think last month in March we had a Futures IO had a really great presentation on cryptocurrency and taxes in the IRS. So I can't remember the exact title. I watched it, and it was really good. So I'd recommend, if you have more questions about taxes or what to do, I would definitely refer you to that webinar from March. I don't remember the exact title, but maybe Terry can help you with that at the end. But basically, the one thing I wanted to say is, Coinbase, they were subpoenaed to turn over all their accounts, and or 14,000 accounts from a certain number of years, and they uncovered 14,000 accounts, and in those 14,000, only they cross-referenced them with taxpayers, and only about 700 or so had actually paid taxes on their gains in Coinbase. So they know that people are making gains and not paying taxes. So they're ramping up. Let's just say, I'm sure they're ramping up their Bitcoin enforcement or their cryptocurrency enforcement. Okay. So before we go into trading systems, let me see if there's any questions. It's kind of a good pausing point. Terry, do you have any questions I need to address or comments? I'm not sure if he's listening.
Yes, I am.
Okay. Will I be able to see the comments or questions too?
No, I'll have to read them off to you. Okay. There's a question on, will Lightning be a permanent scaling solution, or will we go back to the high fee problem of September, November 2017?
I'm not sure. I'm not sure. I'll just say that I'm not sure if that's. I mean, Lightning has promise, but it's really going to come down to adoption, who adopts it, and so yeah. Any other questions?
All right, that's it for now.
Okay, thanks. Okay, so let's talk about trading systems, which is kind of the topic of this whole thing. And I'm a very systematic trader, and so that's whenever I attack a new market or new asset type, that's the first thing I want to do. Is my goal is to somehow systematize or even automate my ideas and how I think about the market. First, I have to understand the market, and then go there. So most exchanges have a simple app or website you can use to buy and sell. There aren't a lot of third-party tools yet. I know MetaTrader has some. There's some UK guy that has an add-in to MetaTrader. I don't know if it works. You can check it out if you want. I know Ninja has some third-party add-ins. I've seen one or two. I haven't tried them. I don't know about TradeStation or eSignal or any of these others. TradingView, however, is a web-based charting platform, apparently execution. But TradingView has really good access to crypto data and charts, and there's even a scripting language called Pine if you want to produce trading signals and get text alerts. And I'm just gonna see if I can bring it up here. So here's TradingView here, and this is a weekly chart of Bitcoin in US dollars, BTC USD. And then on the right here, I have a bunch of other coins. I have Ethereum, and I have Litecoin, I have Bitcoin Cash, a Walton coin, Neo, NEM, and then I also have Monero. So there's a whole bunch of here of cryptocurrencies, as well as altcoins, available to you on TradingView. So you see TradingView.com is the website, and there's a free version. I think I paid for an annual version, and it's like $80 for a year, and I got a bunch of alert features. And I haven't really currently used all the features available, but the this is what I use mainly, at least to chart and to track, where these markets are going. And you'll notice that a lot of them are quoted in terms of Bitcoin. So Bitcoin is not that one, but let's say like Walton coin is the base currency is Bitcoin, BTC. And so again, I look everything in terms of Bitcoin. IOTA here is the USD. I don't think I could find a IOTA Bitcoin quote for some reason when I did this. Maybe there's one. Okay, so there's one available now. All right. So I like TradingView. Coinigy, I know some people that use Coinigy. Apparently, you can track multiple accounts into one website. So if you have accounts at different exchanges, you'll be able to watch and track those. I don't know if you actually trade through Coinigy. Check it out if you want. You can also use Shapeshift if you need to just convert. Hey, I have Ripple and I'm going to convert it to Stellar. It'll do that. That's all it does basically. Shapeshift. And then there's something I just noticed. I don't know how new it is. It's called MedVed Trader, and it looks like a trading system that supports GDAX, Binance, Poloniex, and Bitfinex. And if you're an Optimus Futures user, which I used to be, it's free. Otherwise, it's like $100 a year, I think. So Optimus Futures is pretty good. They're a good future service. I've actually thought about going back to them because they provide a really high quality service for futures trading. So that's something you can check out too if you're looking for tools and systems. Okay. Any new questions, Terry? Is this okay that I keep bugging you for questions?
No, you're fine. There's no questions at the moment.
Okay. So one thing I think is important is fundamentals, that you kind of at least know the nature of the cryptos you're trading. Now, I think for trading, it's not as important if you're short-term trading. It's just like any other asset. If you're investing longer term, this matters more. So for example, if you're an investor in these things, you want cryptos that have finite supply that can't just be created. You can't have more supply created ad infinitum. That way you have the supply and demand, the laws of supply and demand in your favor, because really there's less and less supply being found, and as demand grows, that's going to force the price up. So the only supply after that will come from sellers. There's no stock splits or dilution or any of those other things that people do to create more supply artificially in other markets. You want to watch news, especially coming out of Asia. There's a lot of, whenever something happens in Asia, like news in terms of, are they banning, like when China banned ICOs, that really moved the crypto markets quite a bit. I know Japan, Singapore, Korea have made some other statements about their support or not lack of support for cryptocurrencies, and those can really move the market. So, the Asia trading session, when Asia is awake and alive, the cryptos can move a lot during those hours of the day, primarily when these news events come out. It's good to invest in cryptos that are bringing improved technologies like Lightning. If they're maybe somehow having faster blockchain transaction validation, maybe they're using different validation techniques that don't use up so much energy like Bitcoin uses. These are some other types of proof for validation that's out there. Also, that can be more scalable. Bitcoin's having scale problems. That's one of the big issues with Bitcoin right now. And can handle the threat of quantum computing. It's said that once quantum computing becomes popular and readily available, that the computing power is so fast that it'll decrypt and destroy any sort of cryptography algorithms that are in use now. So people are ramping up the difficulty of the security of these cryptocurrencies and their blockchains, because when quantum computing comes, they're going to require more powerful tools to prevent hacking and prevent manipulating these networks. Also fees. I mean, the fees can be really expensive. Especially in trading commissions. We'll get to fees in a minute, but as far as transfer fee, even just transferring money, coins from one place to another, you got to know what the fees are. Some exchanges, like I can exchange Bitcoin from GDAX to Binance free, but if I want to send Bitcoin back to GDAX, then I'm gonna have to pay a fee for that. And I don't know exactly right off the top of my head right now what those fees are, but they can be meaningful, especially if using Coinbase. You know, like many people that use Coinbase for the first time, and when I did it, they charged 3.9% right off the top. And then I found out, oh, there's this other thing called GDAX, which is their exchange. The fees are much lower at GDAX. Coinbase is just kind of the consumer front end, really a wallet application that's very consumer friendly. So, and also get to know the team, the mission of the coin. You know, some coins are created to help promote art or help cure hunger. You know, some are mission oriented. And if you support those, then, you know, maybe you want to be involved with that coin. Okay, so trading characteristics. I used to say you can't short. I didn't know any way to short these things, and recently learned you can on the Kraken and Poloniex exchanges. You can create a margin account to do, among other things, short. I have not done it yet, so good luck with that. I've never tried it, but I wish I would have known that when we had that big drop down. It would have been nice to be able to short that. See, that's Bitcoin Cash. Let's go back to the weekly. You know, it would have been nice to be shorting here, this move, since December and February, or December and January. Anyway, check that out. I've never done it. I tried to get a Poloniex account last year, and it was during a time where they stopped accepting U.S. accounts from the whole U.S. So I was denied, and then I moved on and went to another exchange. But I think now they're fine. They're open. You can open accounts there. As far as I know, there's no options. You know, we have the futures exchanges and we have the futures exchanges. The CME group and the CBOE have futures exchanges on Bitcoin, but they're still not very liquid. The bid-ask spreads are pretty wide. There's just not a lot of liquidity there yet for frequent trading. If you want to do some longer term hedging, maybe it's a good way to go. There's really not much leverage either, so you're kind of just paying the full cash value of all the Bitcoin. You're not getting much leverage. The nice thing about these is they make big moves, and we talked about the futures already. And when you're trading the altcoins, you're usually trading against Bitcoin. You might be trading, you know, it's Ripple to Bitcoin or Ripple to Ethereum, or in the case of Binance, Ripple to Binance coin, which is their own coin. There's also this thing called Tether, which is basically, the symbol is USDT, and it's basically a coin that's supposed to always be worth $1. And so it's kind of a synthetic way to trade against the US dollar without actually going into dollars. You're going into Tether. I personally would not trade or put too much trust into Tether. There's a lot of speculation that maybe their ability to peg to be worth $1 is they don't have enough cash to actually keep their currency pegged at the US dollar to be at 1.0. And it does wiggle a little bit, goes up or below 1.0, but it usually is about $1. So far it's been done pretty well, but I don't know, we'll see. So you have those risk of the two coin. You're not just, your risk isn't just the, let me go back here. Your risk just isn't the coin you're trading, like, you know, Ripple or Cardano, whatever your altcoin is. You're actually, because if you're trading Cardano to Bitcoin, it may be, quote, going up, and you think, great, I'm making money, but the value of Bitcoin is going down, and that may be why the Cardano to Bitcoin ratio is going up. So if you're like me and you say, my goal is to acquire more Bitcoin, I guess I'm getting more Bitcoin, it's just the value of my Bitcoin is going down. So anyway, there's a lot of sketchy people out there trying to exploit noobs and people that aren't in the know or haven't done their homework. A lot of outages. November, Coinbase was opening 100,000 new accounts per week. I don't know what it is now, but there was a lot of people getting involved. And then we talked about commissions. You should try to keep it around 1/4% or less per trade. On a GDAX, on a limit order, if you outside the market, you can have your orders filled at 0%, no fees. But if you're a market taker, like a market order, it's 0.3%, and depending on volume. I think Binance charges 0.1%. I haven't checked in a while, but I thought that's pretty good. That's one of the reasons I like Binance. So actual trading strategies. Before we get into this, any questions, Terry? Talk about strategies now. Terry, any questions?
Sorry, I was talking. I didn't realize my thing was muted.
Oh.
Let's see. What coins other than IOTA and Quantum are quantum immune?
What coins other than
IOTA and Quantum are quantum immune.
Or quantum? Yeah, quantum computing. I'm not sure. I can't give you a list, and I'm not really worried too much about it today. But it's just something kind of long term you should be aware of. But I don't really know right offhand. That's a good question, though.
And what is your target holding time for your trades?
Well, I mean, it kind of depends on your strategy. I haven't traded a lot of this lately. When I was trading it more frequently, I was just trading off of a daily chart. And so I may hold it a day, I may hold it for weeks. Just kind of depend on where it went and when I needed to get out. And we'll talk about that in some of these strategies here.
Okay.
Okay, so we'll talk about 4 kind of areas of strategies: investing, trading, some other ideas, and then automation. So investing strategies, these aren't rocket science or anything new. Some of you may have never seen this before, but they're well known. One is just dollar cost averaging. For a while, I was just putting in a certain amount every week. It just, back last summer, I'm just going to put, I don't know how much I was doing, maybe $500 or $1,000 a week of just buying Bitcoin. And I didn't want to get too big into it up front, but I want to just kind of test the waters and just get in slowly. The nice thing about that is, you're always buying more, and if it goes down, you're getting more value, and then if it's going up, you're getting in, but you're just getting fewer coins. But that's kind of a good way to go if you're a long-term holder. Not sure what else to say about that. So, and then there's HODL, which is a kind of a term in the crypto world, which just means hold on for dear life, which means you're a long-term true believer. You're holding no matter what. And that's kind of me. I'm a hodler of Bitcoin, at least for now. I'm not a fiat hating Kool-Aid drinker, but so just kind of buy and hold, really. Excuse me. Another one is called spray and pray. So kind of like an angel investor, you're just throwing small amounts of money at a lot of different coins and hoping that one, maybe 2 of those really take off and pay off all those other little losers that you didn't work out. So you're spraying your money around and hopefully praying that 1 or 2 of those take off. Or if you have let's say you have a tranche of, say, I'm going to buy 20 coins. I'm going to go buy the 20 top coins and put $1,000 in each. So I have $20,000. And so once I've acquired those, I then could trade each tranche, each coin individually, maybe to some other active trading strategy, or just HODL. So a lot of different things you can do there. Many people have said, and I've noticed this too, that simple technicals work pretty well on cryptocurrencies. Excuse me, I was getting a drink. which is kind of nice. These are relatively new. They're not noisy markets like a lot of the other markets we trade in. There's a lot of inefficiencies, which is good and bad, but if you can exploit them, it's good. So whenever you get new markets without a lot of noise, technicals can work pretty well. A simple one is just, a simple moving average actually works pretty well. So if you're above a moving average, you want to be long. If you're below it, you want to be flat or short if you want to try shorting. I said no shorting, but you can now. And when I started, I was just doing that, and it worked pretty well. I was, getting in. I was using a 10-day moving average, buying above it and getting out below it. And the point of that was, it was more about getting out when it went below. Because I was really afraid these things might just go to zero or might blow up. And so I don't want to be around when it goes below that moving average and watch it go to zero and then have to worry and stress out. Is it going to go up? Is it going to go up? I'm already out. I like Ethereum. I haven't had Ethereum since, I don't know, January. I think December is when I got out of Ethereum. It was around, I think it was around 1600 I got out of Ethereum, and just because it went below the moving average. And it's gone up above it a few times and below it a few times. I just haven't bothered trading it since then, but that saved me a lot of pain because it went down hard for quite a while. It was below that moving average for a while. Or, two moving averages, simple kind of trend following strategy. I'm not going to go into all the details of all these, but there's also, like turtle-like trend following, maybe have a channel, a breakout and breaks new highs or makes new lows of some period, like a Donchian channel, 50 period or 20-day period. And you can use this sort of trading, these sort of strategies work well if you take the breakouts when the trend is bullish. And you could say, hey, if a 50 period moving average is above 100 period moving average, then I'm only going to buy breakouts to the upside. If it's below, meaning it's a bearish regime, I'm only going to take breakouts to the downside. And so that helps you, follow the trend when the breakouts come. And then you can use like a trailing stop. Those trailing stops work pretty well in those sort of systems. There's also relative momentum systems, sometimes referred to as relative strength or rotational systems. So let's say you have a universe of cryptos and maybe a basket of 20 cryptos, and you're only going to own 5 of the best performing cryptos. So, what's the best performing? Maybe every month you look and say, hey, which ones made the most last month? And the top 5 are the ones you hold for the next month. Or maybe it's every week, maybe it's every day. The more you rotate, the more you're going to create more noise in your portfolio, and your commissions are going to go up. Excuse me. And you have to kind of think about what time frame is the best time to readjust. In typical assets like stocks or futures, a lot of people will do, they'll trade like ETFs or maybe futures. And so they're diversified across different asset types. And then they'll say, oh, sorry, coffee. Then they'll say, which asset in the futures market's made the most in the last month or 3 months or 6 months. And then once a month they'll rebalance. This way you're only long the strongest ones only. Another adaptation to this is the price has to be above some sort of long-term moving average. So, even though if Cardano went up the most, if it's still below its 100-day moving average or 200 or whatever moving average is your regime filter, you still don't get in it because it's still in a bearish regime. I don't care how much money it made or how much it went up. It may have gone down, but it went down less than the other. So it rises to the top as the best performer, but it still had a negative return, and it's still in a bearish market. Stay away. So there's a lot of books on these sort of things and academic papers that were or describe kind of all this. You just have to kind of, here's some books if you want that talk about some of these different types of momentum or trend following strategies. This one on the left, the following the trend, I really liked a lot because he basically shows how he takes a bunch of the CTA's returns that are published, the CTAs, and then reverse engineers their strategy to, they're all kind of using the very similar strategy of what I mentioned before of the 50-day, they have a 50 and 100 moving average. There's a breakout, usually a 50 period or 55 period high, breakout. And they use this for the 2 moving averages as a regime filter, and they have a trading stop, usually 3 or 4 ATRs on the move. The one on the right here is good too. I like that because it talks a lot about the 2 types of momentum, the kind of the absolute momentum and relative momentum, and it actually shows how if you combine them, it even makes it more powerful. All right. Other ideas, arbitrage. Again, these markets are pretty inefficient, and so when you get inefficient markets, arbitrageurs will come in and make it more efficient. At least they'll exploit the inefficiencies and bring more volume. I'm so sorry. This is really difficult to actually do and hard to do, so I'm not going to spend a lot of time on it, but you actually can go look at different exchanges, and there are times when the prices between exchanges get really wide and vary, and those are the kind of moments that computers and high frequency traders love to find. So there's computers just sitting around looking at maybe 20 different exchanges and looking for wide variances between them that they can exploit. They can buy on the cheaper exchange and sell on the more expensive exchange. And then down here in the bottom, crypto derivatives. I talked about the CBOE and the CME futures a little bit. There's also some ETFs or funds that you can use if you want to try to trade proxies of these in the stock market. And then a lot of people have put money into, have kind of risen, these stocks have risen over the past, like AMD, Overstock, Square, and Riot, etc. Just because they're somehow affiliated with Bitcoin and cryptocurrencies. So there's been a lot of talk about bubbles. A lot of people say it's a Ponzi scheme. It's going to end badly, said Warren Buffett. Jamie Dimon said it's a fraud. Hey, I love bubbles. Bubbles mean volatility. And so you just have to be aware that it might actually be a bubble, and you don't want to get caught. And so you want to get out when trouble starts to appear. And so, like I said, don't just hodl to zero. At least if you're going to be a long-term investor, at least use a simple moving average to get out. On a daily, I'd do a 200-day moving average, a 400, a 40-week, or a 10-month moving average. They're all kind of the same. Just to kind of not to harp on moving averages too much, but here's an example. Here's the SPY, the S&P 500 ETF. And I can use these little drawing tools. So here we have this is the 2008, beginning of 2008. And it crossed below the 200-day moving average, and then it crossed back above it, I don't know, or about mid 2009. And so all this drawdown from, let's say, 150 to 90, you saved 60 points of drawdown you didn't have to go through if you had gotten out on that moving average. Now, they're not perfect. Obviously, you have some choppy moves here and here. You have some up and down and up and down. That might have cost you some money. But overall, they're nice because they can help really save you some money and save you a lot of pain in the future. But they're not perfect. Let's see, I want to go to the next slide. For example, here's in February we had what I called the vol apocalypse, the big on the SVXY and XIV. Here's this line here is the 200-day moving average, and if you had hoped that would save you, you know, on that one day it opened at 100 and then it closed above 70, and that would be your signal. Oh, it's below the 200. Get out. Excuse me. Well, the next day it opened at 11. So you didn't really have much chance to get out. The only way you could have protected yourself was gone out sooner or had options, put options to protect you. So buyer beware. All right. Another strategy I like, and what I call border trading. I don't know if there's another name for this. This is the name I invented. It kind of reminded me of a border or a wall. And so one day I was just looking at a chart similar to this one. Here's a continuous chart of the crude oil futures. I was kind of glancing at it. I was looking at these big bars here. Let me get my highlighter. I guess spotlight. Let me get these big bars right here, right? Like this is about probably 160. It opened at one. This is a monthly chart, by the way. So it opened on the month 116 down about 105 probably. That's 11 points. That's $11,000 per contract. This one's about $15,000 per contract. I'm like, man, that'd be really cool to like be in short here at the top. I thought, well, we don't really know which way it's going to go, but what if I just created a line on the first day of the month and said, if I'm above the open, I'm long. If I'm below the open, I'm short. And then I would catch all that move. Now I would lose money as it went up, and then it would go down through my line. That would, I'd have, my loss would be pretty small because it'd be near the line. But, excuse me, my loss would be small, and I may have a lot of those, but that's a big move. That can pay for a lot of losses. Now, obviously, smaller bars like this one, there's not a lot of, your gain is very small, and you may have a lot of losses. So there are bars where you're going to lose money, but you're really waiting for these big bars like this green one. Opens at 70, ended around 80. That's another $10,000 a month. So I kind of, I wouldn't say invented it, but came up with this concept I call border trading. And here's an example of a border trade on the Dow intraday. These are 5-minute bars. I draw the line here at this point in time, and then anytime above it, I'm long, and anytime below it, I'm short. You kind of think of this as like a range breakout, but my range is a line instead of a range. And the line is just telling me what side of the market I should be on. And then of course you have issues of, how often do you check the border? Is it tick by tick? And if it's tick by tick, then you're crossing potentially this border a lot. Let's talk about that in a second. So anyway, pros of the border trading: you're always on the right side of the market, which is kind of nice, and your losses can be really tiny. Cons are every time you cross the border, you lose money. Hopefully not a lot, but you do lose money. And it really needs to be automated. It's hard to do this manually and sit there and watch it. You can, if you use big bars like maybe 15-minute bars, or bigger bars than just a minute or so, you could trade this manually. But you just got to keep your eye on the market all the time. And you also need volatility. I mean, if you don't have those big moves like I showed you, it's not going to work. So cryptos have big moves, and this is why I find this attractive in cryptos. Of course, when the markets go sideways, you get killed with a lot of border crossings and you lose money. So the challenges I found of this is, how often do you check the border? Do you check it every minute? Is it every tick? Maybe it's every 5 minutes. Maybe it's once a day, depending on your time frame, if you're doing a monthly border trade. Of course, the longer you wait, the further away your exit's going to be from that border, and it's going to be a really expensive loss potentially. Also, should I have a profit target? Maybe, if I hit 10,000, I want to get out, or maybe some level of ATR on a higher time frame is another way to look at it. And then another tricky part is, when should I define a new border? I showed you an example of the beginning of the month. So time-based, maybe when is there ways to predict? Are there ways to predict when a big move will happen? Maybe when we have some sort of congestion or buildup of energy, like maybe when we hit an area of support or resistance, maybe like a volume profile or market profile area, value area, or Maybe extreme levels, oversold, overbought levels could be a place where market will either turn or take off. Anyway, yeah, so it's kind of fun. I do a lot of research on this, different ways to predict when the market might explode without caring which way it goes. Obviously, news and pre-market gaps, earnings, those things can make big moves as well. The problem with stocks, it's hard to do this with stocks because they have gaps, and so if you're gapping through a border, that loss is going to be pretty sizable. So futures, it's a little better. Futures and currencies, cryptos, 24-hour markets, so it's a little better. You can do it overnight. So here's another example of border trade. The yellow line's the border. I was below it, so I got short, and then I got long because I closed above it. Now, let me get my marker here. So here I got short. So the yellow line is the border. I'm below it, I'm short. Now I'm above it, I'm long. And you can see in this line here, the wick did go below the border, but it didn't close below it, so I stayed long. And even the next bar next to it closed or went below it, and even that green bar below it, its wick touched the border, maybe crossed it. So if you do it tick by tick, you're going to get a lot of crossings right there, but your stops will be small. There'll be one tick on each side. It'll actually be 3 ticks, depending how you implement it, but between 1 to 3 ticks, plus slippage, plus commission. But if you're using closing bars of a certain time frame, like I'm using 5-minute bars here, you stay long and you're good until here. Then you close below it and you get short. But then the big move does happen. And in this case, I had a profit target. This is a 1 from the entry to here. This red line is 1 day's ATR, or some fraction of ATR. I think it was 1 day, 1 whole day. So that's a pretty good trade there. This is a bad day of border trading. A lot of crisscrossing across borders. I'll get my drawing tool back on here. A lot of crisscrossing. This green bar closed above it pretty high up here. So that was between here and here was a pretty sizable loss, and then it went down again from here to here because to the close of this red bar. So these losses can be big, and if it does it over and over again, you're losing a lot of money. And I've had those days too. So, border trading requires volatility. Here's a back test on the the Dow futures. And the reason I picked Dow, I kind of like the Dow because they're $5 ticks, and so the smaller tick amounts make it more interesting. I think the border crossing costs less when you have smaller tick values. Like the Nasdaq is also $5 a tick. The RTY is now $5 a tick. But as you see from 2017 all the way through 2017, I remember the VIX was like 9, 10, maybe a few spikes here and there, but we just did not have much volatility, and you just couldn't make money. And it didn't really start turning around until looks like about mid to late November here. Sorry, I'll get my spotlight tool. Here's about when it started to make its ascent, about $30,000. So since the new volatility regime we're in, these sort of strategies work better. All right, let's go to the next. And so I do a lot of research, looking for volatile, in this case, stocks. And I thought about, well, again, this is not crypto, but I would apply these sort of methods to crypto. I currently have not applied this to the crypto trading yet because I'm still working on my automated trading platform for crypto assets. And I hope to get that out by June to have that platform ready for me so I can automate some of these things for cryptos. Basically, it means I have to implement the APIs of the various exchanges, and just a matter of finding time to do that. So my trading plans going forward, I'll continue to trade on the daily time frame in simple trend following strategies. Continue to research implementing automated strategies. This is back in January. I will research arbitrage opportunities, but they disappear quickly. and it's really hard to do. So I'm probably not going to pursue that at this point. And there are people doing it, and I think they're doing pretty well at it. But these things go away. These edges go away eventually. Who knows when? But I don't want to invest a lot of resources into that and have it already be gone. So I think I will leave it up to the people already doing it. I'm interested in the derivatives, like the futures, and it's just the liquidity's not there. The bid-ask spreads are really wide still, so I'm still just kind of watching and waiting. I think when I get options, I think it might be more interesting. So I think cryptos are here to stay in one form or another, and there's a lot of major, at least for Bitcoin, major technical issues, and there's a lot of coins out there addressing the technical flaws and weaknesses of Bitcoin. And Bitcoin is losing market share. I mean, if you look at where's my web? Here. I mean, today this is cryptocurrency market cap, coinmarketcap.com. It's basically lists all the top cryptocurrencies in order of market cap. So Bitcoin's on the top, but Bitcoin today is only 37% of the whole cryptocurrency market. Not too long ago, it was a lot more than that, and it seems to be shrinking. So I don't know, how much longer it can remain the dominant coin. I think it's still going to be the dominant coin for a while, but that number is I believe, going to keep dropping if they don't solve some of the issues that have plagued them for a while now, and releasing it to the public, getting implemented. So I also have a warning, be careful what you wish for. This concept of, having a limited coin supply sounds great, but there are times when we are on the gold standard, which made things worse for our economy. There were times where people would hoard gold, and then there was no money supply, and no money was being traded or flowing through the economy, and it really hurt the economy and caused depressions and recessions. And so, as evil as central banks sound, or creating currency out of thin air sounds, it's sustained this thing better than being on a gold standard, or a standard of some asset that can't be increased in supply. So be careful what you wish for, I guess, is what we're saying. We talked about the blackmail I got, and I think for now, as traders, the main thing that's great about all this is the volatility. I mean, you just want to trade volatile assets that make big moves. You want to be on the right side of the market when they do make the moves, and that's how we can profit. And I have this thing about the circle of trust, right? From that movie, I can't remember what it was called, but the Fockers, I think. Meet the Fockers, and he's telling the son-in-law to be, I'm watching you, and you got to get in the circle of trust, and you're not in the circle of trust yet. And so the circle of trust for trading, for me, is which assets do you trust the most? I think futures are probably the most trusted because they're hard to manipulate. You have segregated accounts. It's a regulated market. ETFs are probably next because they're a basket of stocks and commodities. It's hard to corrupt a whole group of basket. Stocks that are then the next lowest. Corporations can lie, but the SEC tries to mitigate that. But stock-specific risk is hardest or highest higher among stocks. Then they have forex. We've seen forex brokers, go broke, blow up. Overseas brokers, shenanigans. And then crypto is the worst. There's not a lot of oversight. We have anonymous counterparties. We have no government recourse if something goes wrong. But the only thing we can trust, there is an amount of trust built in the blockchain and blockchain technology and verifying transactions. It's hard to hack and manipulate the actual transactions in the blockchain. So that's one level of trust that is unique to cryptocurrencies. And just secure your wallets, move to cold storage whenever possible. Cold storage is a term meaning your coins are not accessible online, maybe you move them to a wallet, just a physical wallet, or there's wallets that are actually physical, like a credit card, or you can actually print them out on paper and just put it. I know people that print out their IDs of their wallets and put them in a wallet, or excuse me, a safe, and just lock it, and like cash. But they can't spend it anywhere. It's just a way of storing their coin offline, so it can't be hacked or taken. And here's the main thing, I think. If you're going to get involved with this and you're new at this, just do it really small. Don't put your whole life savings into this. You know, when I went into this, I said, okay, I'm going to put 2% of my, my trading assets into crypto. The problem was it kept going up and up, and it suddenly became 10% of my of my portfolio, just because that little 2% kept growing. So I had to, readjust and rebalance, and that was nice. But do go small in this, because it could go to zero, or your broker, your exchange might get hacked, or a lot of things could happen that are out of your control. So for resources, CoinDesk is a great site for like this industry news, what's going on in the crypto industry. Like I mentioned, CoinMarketCap lists all the various coins, sorted by market cap. You can also sort them by, if you want them sorted in terms of Bitcoin. And then if you want to do that rotation thing I mentioned, you can look at the chain. This is only a 24-hour change. I wish they had a way, maybe they do, to say, I want to see what's gone up the most in the last week or month. But right now it's just the last 24 hours. So you see Stellar's up 6%. So that maybe you should move into Stellar. Ethereum Classic's up 7%. Omai's Go is up 15% in terms of Bitcoin. So there are various subreddits on reddit.com that are pretty popular with the crypto world. Each exchange has a website, and then, like I mentioned, tradingview.com has charting on just about every coin out there, which is really great. And that's it. That's all I have for you guys today. And I want to thank you for coming. And if there are any questions, I'll take those.
Okay, let's see. How can we get altcoin data on Ninja Charts?
I don't know. I have not done that. I can tell you some sources. I was going to show you this. I forgot to show you this. So here's a back test I did, just in Excel, and I got the data from this site. It's called data.bitcoinity.org. Let me just click on it and we'll go there. Let's go there together. This site has data you can download. See right here, it says export CSV or XLSX. Down here on the bottom. But it's only closing data. There's no open, high, low, close. It's just close. So you don't get bars, but you just get a closing value each day. You can pick your exchange here. Let me turn this off. You can pick your exchange if that matters to you. That's one source. As far as altcoins, I mean, it's really hard. This is still maturing. I think it's going to become easier, but for now, it's still kind of hard. The exchanges you use might have some data export capabilities, or I know through the APIs you can download historical data. If you want to write code to an API, most of them have ways to download historical data. I guess that would be my answer.
Okay. How much do you think you would need to actually start trading a cryptocurrency?
That's a good question. You can have $100, a really small amount. Bitcoin's worth $9,100 today, but you can buy fractions of Bitcoin. You can buy $9 or $90 worth of Bitcoin and trade that if you want. Now the fees, like I said, the fees are kind of high. To make it worth your time, you might want to put in a little bit more. But if you want to just get in small and play around with it, yeah, you can do a couple $100 and you'll be fine. The at least Bitcoin and most of the coins can be divisible down to 8 decimal places, and one of those is called a Satoshi. So if I have 0.0000 0.00001 Bitcoin. That's 1 Satoshi. That's the smallest amount you could have, and that would be like 0.09 cents or 0.0009 cents. So you could buy quite a few thousand Satoshi and still not pay a lot.
Nice. Okay, I think that's all the questions at the moment. I'll give them a minute or so, and then if not, we'll go ahead and close it. Oh, there we go. How do we get access to APIs?
Okay, good question. So each exchange has an API website. So we just go to Google. So on this tab, actually, I have the Kraken API. I was looking at how Kraken does their API. You can just Google, so GDAX is one exchange I use. Just Google GDAX API, and there's an API reference, and it tells you how to connect to it. On the left here, this little gutter. Let's see, API market data. So here's how to get market data. And there's a little JSON, if you know what JSON is, request, give example requests and the example of what comes back. So yeah, each exchange has their own API. Binance has an API. That's my next one. So I say Binance API. They're all kind of similar and they all kind of work the same. This is actually on GitHub. So yeah, just Google the space through the exchange. So exchange and then space API, and that'll usually get you to the API for that exchange. But you have to be a programmer, or at least have some programming skills to pull it off. So.
Okay, I think that's it for the questions. Thank you for the webinar today, for the information, and for spending some time with us. Can you go back to the last slide that has your contact information on it? That way, if anyone has any questions, they can, if they're watching the video later, they can contact you there.
Sure. There you go. And again, thank you again for your time. And for those watching on YouTube, thanks for your time and happy trading.
Absolutely. You too. Thank you.